All right, wonderful. So hello traders, everybody. Welcome to today's webinar. It's a beautiful Tuesday morning. My name is Yaroslav Burchenko. It is the 29th of March, and together with Olymp Trade, we want to welcome you to a very effective strategy. It's called the Jack-Tar strategy, and you're actually lucky that you get to watch the webinar under my supervision, because I personally use these moving averages in my trading strategy, where I use two oscillators, moving averages, and Bollinger Bands. I'll actually give you a little hint where you can add the 20 period moving average by adding the Bollinger Bands indicator on top of it. So where do you find the Jack-Tar strategy? It's actually one of our expert trading strategies. So it has the biggest expectancy. And before I get too far ahead into the webinar, I just want to go. I have some trade ideas for you. I want to remind you that we have the lovely Angie in our chat with us today. So if you have any questions, you can go ahead and ask them right in the middle of the webinar. You don't need to wait for the webinar to finish. You can ask them right away in chat, and Angie will be assisting you with any questions you may have related to trading, of course. Now, you can put on the Jack-Tar strategy. It's right here. You just click on enable strategy. It'll get rid of all of your technical indicators, and it will put on 3 moving averages. So the simple moving average with a period of 50, 100, and 200. It is a very, very effective strategy. Now, besides all the things that you can find on the little video is just an introduction. I will give you a bunch more different ways of getting entry signals, of getting exit signals, of just reading the graph when using the moving averages. So I want to check if the sound is good, if you guys can hear it. Mustafa Nouri, welcome, my friend. Welcome to everybody. Good to have you guys with it. This is live. So Random Stuff Makers asking if it's recorded. This is live. So you guys are here with me. Like I said, 29th of March, and it is a beautiful Tuesday morning. All right, so let's get on with the show. So now, once you have the indicator on your graph, you're going to see 3 lines colored in red, green, and blue. Those are the moving averages. One other indicator you can add, but it's not needed. If you click on the Bollinger Bands indicator, it will add also a 20 period moving average. For the purpose of this, thank you very much, Angie. For the purpose of this webinar, we are going to take off the Bollinger Bands indicator, but in my personal trading, I use this indicator as well because it helps me to analyze wave patterns. There is a theory of market structure. It's called the Elliott wave theory, but in my experience, it really sucks when you have measured out all the Elliott waves, and then at the end, where there should be a reversal, when we should start a reversal wave pattern, it doesn't come about. So we are going to, that's why I use Bollinger Bands instead. It's much more easier to kind of gauge that, all right, now we're supposed to go up, and if we don't go up, then we expect to go down from the middle line, from the 20 SMA. But like I said, for another webinar, for another time. Right now, we're working with 3 of the most popular technical indicators in the entire world. If you guys can go ahead and let me know in chat if there is some sort of experience that you have with algorithmic trading. I have in my past dabbled in algorithmic trading, and I have a lot of programmer friends who don't trade by hand, but they actually trade using algorithms. And I want to tell you that in almost any computer algorithm, the price that is taken by the algorithm itself comes from a moving average. It doesn't come just from the naked candles. It comes from a smoothed out average line, and that's usually somewhere between 20 and 200. So yeah, that is what we are doing. We're using the 3 most popular, the 3 most widespread indicators in the entire world. That's why I believe that Jack-Tar strategy is one of the best on the platform. Now, just the basics of the platform, you guys can go ahead and write this down, not of the platform, but of the trading strategy, is that it works with any time frame above 1 minute. And it's actually one of the better technical strategies to use on the 1 minute chart because the indicator is so large. Like we use 100 period moving average. We use a 200 period moving average. What that means is that the signals that you get, even though it's a 1 minute time frame, it's very chaotic, it's very unpredictable. The longer period moving averages can still help you to see the broader trend, can still help you to see the greater trend. Now, in the instruction video, they talk about using support and resistance as the final indication when you should open a trade. Now, as you guys can see over the last hour and a half, we really haven't gotten that many entry signals. Right here, we had a few when we broke out of the 200 period moving average. So this serves as the basis. This serves as the, I guess, support and resistance level, where if price touches that level, you want to be buying, and if price crosses over it, then we're shifting positions and using it as the opposite of what it was. So in this example, we're trading below the 200 period moving average. So every time price action touches the 200 period moving average, we would sell, right? We would sell. So here, I guess it didn't technically touch it, but that would be a sell signal. Right here would be one sell signal, right here would be another. And then once we break out, when we have these two red candles, and you always want to sell on the red candle. So what I mean by that is we have a green candle here, or maybe even let's talk about this one here. We have a green candle here, and it's coming up towards the top. The candle has not closed yet, and it's green. You don't want to sell. The candle is green, it hasn't closed, and when we open up the second time frame, or it's the second candle after this one, you can see, if we kind of zoom into this candle, you can see that there was an attempt and it did turn red. It did turn red. So that would have been a false signal, and this indicator would have lost some money. But that goes to show for every kind of indicator what you can do in order to increase your odds, increase your chances of having this strategy make you money, is wait for the candle to be in your favor. So for example here, when we're looking to buy from this level, the candles were red, and then once the candle turned green, that's when you should be looking for entry signals. Now, because it's a 1 minute time frame, you can actually afford yourself the luxury of waiting for the candle to close. And that's what would be my main recommendation. Wait for the candle to close, like buying, say, after this green one. You won't lose too much money if, say, you buy somewhere in between here. But you already have that confirmation that this candle is closed. Now, the time frame, the duration that you want to keep the trade open is between 2 to 5 minutes if it's on a 1 minute graph. So that would be 2 to 5 times of what your original trade would be. So say you're trading on the hourly graph, you want to open on a 2-hour time frame. So you want to open it for 2 hours. And of course, that goes without saying that the longer the time frame is, the more reliable the trade signal will be, and thus the larger your trade size. You can open up larger trades. All right, so let's get into the technical details of when you should open and when you should close. So as the instruction video said, you can use the red line as a support and resistance level. As we break out on top of it and then come back to touch it. So here would be two really good entry signals. I'm going to continue with that same thought process, and then I'll teach you guys some other ways to open up trades. And when we break out here to the bottom, right, there was no trade signal here. We just changed direction. And this is actually a really big indication that we are changing trends, and that the next trade you should be looking for is a sell. Now, there is no concrete law that you shouldn't open when you have other signals, and these three indicators actually give you some other signals, like the legendary golden cross. So whenever we have a longer period moving average, say the 100 and the 200, and it gets crossed by the 50 period moving average, like we have here, this is also a very, very strong trading signal. Very, very strong trading signal. Now, the thing that I want to say is that this works both for both within a consolidation And this works both within a trend, because the initial Jack-Tar strategy only works in trends. I see Mustafa Nuri is asking a really good question. He says, sir, when we have a sideways market, should we look to use big or small moving average? So when it's a flat market, this strategy, the Jack-Tar strategy, as it's dictated, does not work as well. But when you use a cross of the shorter period moving average through the longer period moving average, you can actually use that signal within a flat. You can use that signal. It's a short-term signal. Keep in mind, it's only for a few minutes. So FTT works really well in that kind of market condition, but you can use a cross of the moving averages in a flat market. And that's what makes this strategy so powerful and so effective, is that no matter what kind of trading atmosphere you have in the market right now, you can really find some good entry points. In a nutshell, guys, basically that's it. If you have any questions, go ahead and ask them. If you have any assets that you want to look at, go ahead and ask them as well. This works in any market. Like I said, it is the basis of most algorithmic trading. And so you can use this in commodities and currencies and stocks, even in indices, especially in indices. Keep in mind, what are indices? Indices are the averages of that market, right? It's a culmination of the results of many stocks. And so moving averages, who take those results and flatten them out as is, are a really good instrument to use. So in my opinion, if you're trading indices, even the Euro Composite Index, even the Asia Composite Index, even the Commodity Composite Index, you can use this strategy to get superior results. So keep that in mind, add that to your notes. Let's have a look at gold right now. So Narendra is asking for gold. I actually bought gold as the situation in the Ukraine unfolded, and I showed you guys that trade. That was a really good trade. So right now what we have is gold has finally found a bottom. So we found a bottom on the daily graph, and it appears that we're having some upward momentum. Nobody canceled technical analysis, so you do want to keep in mind that if we don't grow past this level, then probably we're going to continue down lower, and we didn't have a correction high enough to touch the 200 period moving average. But if we look at the entire day of trading, guys, keep in mind this is what the graph looks like. So when you apply this strategy, remember that you want to buy you want to enter into the trade as we go back down. So here we touched right here we touched the 200 period moving average, and right here you probably would have gotten away with a small profit, especially if you're trading on FTT. This trade would have given you some profit, and then here there was no opportunity to sell. See both of these candles, they're green, so you probably should not have sold. Here we had a breakout through the bottom, and when you do break out, you want to wait. You don't want to take the trade. Like remember I said, when we have the big red candle right here, you don't want to be buying on that big red candle. Same thing here. You see how this candle is below the 200 period moving average? It's very important where price action is. If we're below, you don't want to look for a buy. And then anywhere in between here, there was no really solid buy or sell signal. So you would not be taking any of these trades. None of these trades. Have a look at this, guys. Make a screenshot. None of these trades right here, none of these signals are trading signals that you should take. Right? We are diddle-daddling. We're right in the middle of the 200 period moving average. This is inconsistent information. There is no trend. There is no specific trend. But what we do have coming really soon, like right here, is a cross of the faster moving averages from top to bottom of the slower period moving averages. So if there was no trade to be taken right here, the trade that you can take is right here. You could have taken this trade here or this trade here. Unfortunately, that would have been a massive loss, because you can see this candle right here, these two spikes, they would have probably knocked your stop loss out. And that's the unfortunate, I guess, reality of trading the financial markets, is even if you get a really good entry signal, like a golden cross is a really good entry signal, you're still going to have some opportunity to be incorrect. And so you want to make sure you trade small and you trade consistent with a large enough sample size. If you make enough trades, this strategy is proven. It's proven to be positive. It's proven to make money in the long term. And so that's what you want to focus on as a trader. Moving on through the day, there weren't any kind of, in the morning hours, there weren't any kind of entry signals. You could have tried to buy right here, but immediately after the price closed. But then we have the largest sell signals of the day. Touching the 200 period moving average right here, we had a fantastic sell signal that would have earned you money. And then the same thing here, after this candle, after it broke down, that's when you should be looking to open. So after any of these candles, if you would have opened, you would have made some money. Remember, if we have a candle that breaks out the entire way, you don't want to be trading, so you wouldn't be trading anything right here. And then after the breakout to the bottom yet again and a retest, this retest, oh, the best. That's what you want to see, guys. Have a look at this. I want to direct your attention to this area right here. So we were doing some weird stuff up above it. Then we had a big solid candle. You want to analyze the size of the candle. You want to analyze the consistency of that kind of, if it's a big candle and it's one-sided, and then the following candle is a retest, oh, mamma mia. Oh man, that's what I really, really want to see. That's what I really, really want to see. This is a really, really good. Really good trading signal. So, all right, perfect. Sorry, I was just having some technical issues looking on my other screen. So this would have been the ideal sell signal for this strategy. And then looking farther, we don't really have that many sell signals going forward. But I do want to give you another suggestion. If you're trading a very, very trending market, like some stocks are incredibly trending, like if we have a look at the likes of pharmaceutical companies are doing really well, tech stocks are doing really well. There was a pharmaceutical company that I was looking at that really shows that you can use this trading strategy on different time frames and find entry signals for on different different asset classes. Novartis, for example, if we go on to the daily graph. All right, that's probably not a good example. What was I looking at? One sec, guys. I really want to, here we go, Bayer. So Bayer really took off. And if you're trading on the 1 minute graph, you can kind of see that if it's already trending, you can use the 100 SMA for some good entry points. So if you notice that the stock is really trending high, like maybe say Apple, if the stock is trending really well, perfect, like Apple, and it does not drop down to the 200 for, say, most of the day, then you can actually use a smaller period moving average as an entry point. That is okay, that is acceptable, as long as we have this confirmation. So you see the 50 period moving average is tilted up. Below it, we have the 100 period moving average, and below it, we have the 2 period moving average. When you see that kind of consistency and that kind of cyclical nature, when you have the shorter period on top, the larger to the bottom, and then the largest at the very bottom, that's a confirmation that we're in a very strong trend. And that if the price does not dip down to the lowest area, then you can use a resistance level higher, or you can use a support level, as in this case, that would be higher. So if some of these things are you hearing for the first time, you can rewatch the video, but we are definitely gonna do some live tests. So Random Stuff Maker is asking for some entry points. We are definitely gonna do those today. So actually this would have been a fantastic entry point on this cross. And then we also have a cross of the 50 over the 100. and we are trading the Asia composite. I do always want to look at the daily graph, see where we're at. We're kind of headed lower. So actually I have no problem in taking that for 3 minutes, $30 trade for 3 minutes, and I'll let that run. Also looking for one of these. I want to show you how powerful and when to open, right? You'll find lots of trades like this where you have where price breaks through and then comes back down. I want to show you one on a live example so you can understand the thought process that goes behind it. So I'm just going to look for this is actually a good one. Commodities are shooting up. This may be something that I'm going to take. So this is to show you that once we have the 50 on top, the 100 is below it, and then the other one is below it. And we're also in an uptrend right now. Commodities in general are becoming much more pricier with the situation in Ukraine. So this is actually another trade that you can look to find in your throughout the day. It's actually a reliable trading signal that you can use. Euro dollar, I don't have that same kind of confidence as I do in commodities. US dollar, Japanese yen, let's have a look at that. USD JPY. I know the Japanese yen, the Japanese in general, they've been devaluating their currency. They've been called out on it before, like Donald Trump during his presidency. He called out the Bank of Japan. He said that they're devaluing their currency. And they were like, no, we don't do that. But actually they do. And we see that with the Japanese yen. You can see in a lot of different crosses, it's been crazy devalued. So when you're looking at this, obviously there's some kind of something going on in the background. And so the Japanese are devaluing their currency, and that's so that they can prop up their inside market. That's so that they can firm up their own economy. It may be bad for, say, Japanese, but it's good for Japanese companies who are selling in dollars and euros. And so that's what we're kind of working with. Actually, I don't mind this at all, guys. Have a look at this. I know it didn't touch the line yet and we're still red. I wouldn't mind buying this. Now, I'll also outline a level that's a good place to buy from. So you see how this kind of trend appeared right here? As soon as we break this level like this to the top, so as soon as price does this, when we have the cross here, that actually may be a good time to buy. But again, you want to make sure that the breakout has happened. I'd actually even recommend waiting for something like this to happen. So if you see this, and then it kind of reverses back down, you want to buy from this level. That would be a great signal, right? It's signaling that we're already broken out, we're already going to the top side, and then there's some kind of correction, a fade, and then from that fade, you can get a really good risk to reward ratio. And your resistance level would be just this level right here. So your stop loss level, if you're trading Forex, would be right here and then a little bit lower, right? So 1, 2, 3, somewhere right here. This would be your stop loss. So entering from here with a really short stop loss, you can put your take profit way above there. Also, the US dollar is going to grow. Have you guys been listening to what the Federal Reserve has been saying? They're really, really hawkish. They really are struggling with inflation. Price of oil is making it very difficult to control inflation. So definitely, this is the trend line you want to look for if you're trend trading, right? Right now, we're in a correction, and actually this correction became even deeper. But in general, we're looking for US dollar strength, and the Japanese yen is one of the weaker currencies right now out there, out of the G7s. So if you have any other questions you guys may have on different assets, I'm going to continue down my list. So basic dollar index. It looks like the dollar in general is correcting, and that's fine. That's absolutely fine. But what I do want to draw your attention to is see when it corrects, we broke the 50, we broke the 100, we even broke the 200, but it didn't go too much farther than that. But nonetheless, when you're trading the US dollar and you're trading such a massive reserve currency, it doesn't matter if it's the Japanese yen or the Swiss franc. With currencies in general, the fluctuations, they can be really crazy. With hard assets like stocks, the situation is a little bit different. Hard assets have a very tight volatility range, and so if they break the 200 and keep going, that's usually a sign of a reversal in trend. When you're trading currencies, they're really flexible, right? They can really go farther than expected. Let me check out the Mahajantar index. One sec. This is the Indian index. It must be only available to you guys. I've been looking for the index on the different platforms. I haven't been able to find it. So I don't have the Mahajantar on my platform for some reason. Is it in the ETFs category? Can somebody let me know? Nope. Yeah, I actually don't have any experience trading the Indian stock market, but I do have, I actually met with Soumya Roy yesterday. What a great guy. What a great conversation we had. You guys can look out for my interview with him. It's going to be on the channel. It's probably going to be released sometime later. So pound yen, or excuse me, Great Britain pound is struggling actually. Let me show you guys. I probably am not going to show it to you, but in general, the pound went through the biggest fall that it had in 3 years. Over the last 2 months, the British pound lost more than it had in the last 3 years. So right now, I actually expect the British pound to pick up a little bit, but in general, it's been a really, really difficult period. Oh, I'm on the 1 hour. It's been a really difficult period for the British pound. Let me see if I can find some trade signals. Again, because this is a half an hour webinar, I'm looking for really quick trades. But if you guys have questions like on the general analysis of something, go ahead and ask it in the comment section and I will reply very detailedly and thoroughly. This may be a good opportunity. I don't expect the Australian dollar to gain sufficiently. Also, we had the British pound. This is today. We had the British pound just shoot off against the Australian currency. And maybe there's a big institutional player that is buying up British pounds. But if we do have a correction, one way that you guys can measure a correction is using the Fibonacci levels. Like, where can we expect? We can expect the price to drop down all the way over here. So buying right now may not be the best trade. So the first trade actually went through. The Asia Composite went through. We had a profit of $27. The commodity index did not. That's okay. That's okay. Let's look for another trade that we can find today. Perhaps it will cover our losses. So for the British pound, right now I don't see any good entry points. This looks promising, guys. Have a look at this. So the British pound against the New Zealand dollar is respecting the trend line and we're having some upward momentum. Let's wait for a minute for this candle to close, because if we close below the 200, or excuse me, the 100 SMA, ooh, yeah, I don't want to take the trade, guys. Have a look at this. As you saw in the pound Aussie, or no, where was it? Pound dollar, we're shifting towards away from British pound strength. Yeah, so I'm not going to take this trade right now. Like I showed you guys using the Fibonacci retracement, we are likely to drop down lower. Actually, this looks like 38%. Long on gold, buy at 1891. 1891, so right around here. TP on 1907. Fantastic. I think that's a good trade. Look at this guy. Gold is breaking out to the top, so we're making new highs. I think it's a good good thing. So guys, I'm not going to speculate. This is human nature. So just to comment on the issue about trust, it's 95% of traders lose money. If you think that you are in that golden 5% who's going to make money, you're probably wrong. In order to transition from the 95 to the 5 that stick around year after year, you need to have experience, you need to have discipline, and you need to have an edge. You need to have edge. If you're just going off of, one strategy without having any market information, without having any kind of fundamental background on what's going on in the world, you're probably going to lose money. And then to make matters worse, when you lose money, it's human nature once again to point fingers. It's your fault. It's your fault. hey, it's your fault. No, man, it's your fault. It's always the fault of the trader who opened up the position, who took the risk, right? It's easy money. Everybody thinks that it's easy money, but I want to remind you that it's the hardest way to make easy money. To my friend who was asking about gold, so Ankit Sanga, I think that gold should stay. Should transition out of this into something, as I'm saying, it gets lower. It should transition out of this into something more bullish. But then again, there's a lot of fundamental stuff that's going on with the price of gold. As long as we keep this trend line and we don't break it, there's a very strong possibility. As you can see, the 50 is already starting to curve. You're already seeing that curve. This is good. The 50 period moving average is not the 20 period moving average. It's actually very reliable. So in my opinion, I do believe gold should correct, but the general trend of gold is up, right? We have a very strong correction to this level, but gold in general has been very, very bullish. And so I do think that gold is going to continue growing. Keep your position on. Let me check out what we have for some more trades I want to open so that you guys can see what a reversal would look like. Where did we stop? Euro Aussie on the 1 minute time frame. I really want to show you guys what a reversal looks like when using this strategy. Perfect. Guys, have a look at this. European Composite Index. Now, the European Union is under fire. They're under stress. Bearish trend. I want to look to open up a sell trade. We rose up to the 200 SMA. We made local new highs, but not midterm highs. Again, this is the 1 minute graph, so I don't even want to say local highs. So, watching this graph, we have our first initial move up higher. If this starts to go lower, I'm probably going to open up a sell trade as we cross to the bottom. I don't like that the 50 EMA is moving up towards the 100. Ooh, it looks like we're even crossing. I do want to give this some more time. We have about 2 or 3 more minutes. So I think Euro Composite, let me write that down and then we'll come back to it before we finish up the webinar. I want to see if I can find a few minute trade for you guys. So quickly, oh no, it messed up everything. I hate Quickler. I hate that button, man. Screws up my webinar. So here we go. 2 minute, $30 amount. Perfect. All right. So I do want to open up a trade, but I want the. So this is what I mean when I talk about. Come on, Eurocomp. Perfect, guys. So this is what I mean. No new high, guys. Pay attention to this. This is the thought process, right? So we have a double top right here. We had 2 attempts to make new highs. The second attempt failed. Right here. Second attempt failed. 1 red candle, massive engulfing candle. You guys should also study up on your candlestick analysis. When we have a large red candle that engulfs the entire previous candle and about half of the other one, then that's usually a sign of that, hey, we might be going lower. We are getting close to the open. What I do want to remind you is that the US stock market is opening very, very soon. And so they may alter the results of this trade. So we may have some inconsistency in the trading conditions, but I do want to direct your attention that the European Composite is very bearish and that there is a strong possibility that we're going to continue down lower. Let's go ahead and continue down the list. Pound, Aussie CAD, Aussie Franc, Aussie Kiwi, Aussie Dollar, and our stocks are online. So guys, we already have the US stock market online. Trading will be available in a few seconds. I wish our webinar ran a little bit longer so that I can show you guys how to trade the open on the US Open is a very important time. I know a lot of traders that specifically work in the first hour of trading. They are algorithmic traders though. You do need to have some sort of backup because there's a lot that needs to get done. But the first hour is very profitable. So this would have been a good buy for Bitcoin, you guys. Have a look at this. So we're in an uptrend and we touched the bottom area, and that would have made some money. Same thing here. So if you're trading, if you want to be using this strategy, Bitcoin is a good, wow, US stock market is through the roof. Franc, yen, copper, commodities in general, I'm looking to be bullish on. So another area that you can use this trading strategy where it really shines is on the daily graph. You guys really want to be checking out the daily graph and looking for those, daily entry points, and then dropping down to, say, the 1 hour. Ooh, have a look at this. So this is on the daily graph. I'm sure we're not going to have any, no entry point as of yet. So I'm going to return to the Euro composite if we're not having any bullish momentum. Perfect. Let's have a look at this. Bop. Open it right there. I do think that this trade will be the last one. It'll be only open for 2 minutes. So let's have a discussion, but this is how the strategy works. Another good signal would be, like, say, if you miss my sell signal right now and you want to enter, a good sell signal would be when we break this level, and that's coming very, very close. So if you're looking for another confirmation, go ahead and check out this area right here. Sorry guys, I'm having some technical difficulties with my YouTube. It keeps freezing. Is the quality, Angie, is the quality of the video all right? Like, we're not having any kind of hiccups? So this trade and the way that we waited, guys, remember, like, there was a lot of confusion right here, but did you see how confident I was when I wanted to open and what I wanted to see? That's the kind of rigid mentality that you should keep. You want to look for specific clues and specific entry points. Actually, you could sell again. Right now, I would probably open up another sell signal if I was you. But this one will be off camera now. But okay, perfect. Thank you so much, Angie. So yeah, this is the perfect example of what you want to be looking for. This strategy is very, very powerful. It's the reason it's so very powerful is because a lot of institutional players use it, right? We have algorithmic traders, we have banks that trade using these kind of moving averages, and so definitely a trade that definitely a trade that you should be looking to keep open. So how many we got? 2 seconds. This one's going to close in profit. Perfect. So our first trade was profitable. I'm not sure how profitable the second one is going to be, but that was just kind of my off-the-cuff trading. It wasn't part of the trading strategy. So in general, the trading strategy should work out in your favor. You should definitely stick to the principles that I taught you in this webinar. If you guys want to catch up on some more information, we have many social media pages, like our Facebook page, like our Instagram page, and our YouTube page. Make sure that you're subscribed to the channel. If you haven't clicked the bell icon, go ahead and do that now so that you can hear when our interview with Soymio Roy comes out sometime in the next few weeks. All right, you guys. Thank you all so much for coming. Thank you for your time. I wish you guys good luck trading out there. And if you have any questions that we may have missed, go ahead and ask that in our comments section down below. My name is Yaroslav Burchenko, and together with Olymp Trade, we wish you guys good luck trading out there, and see you all next time. Peace.